JPM.com.
Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, Nick Santiago, President, CEO in the Money Stocks with us right now. Nick, welcome back to the show. How are you doing?
Great to be back, Michael. Thank you for having me.
All right, my pleasure. Listen, we got a lot of stuff going on. It's been one heck of a week. Up, down is like a ping pong ball or a Super Bowl in a square cage. What's going on with JP Morgan? Start me off there.
Well, JP Morgan is really the tell. We talked about it last week, and I said, you could watch for this stock to get a bounce around $50. I said that's ultimately where the stock market will probably find its low when this stock gets to around 50. It traded at 50.11, and you see it now trading at 53.22. The market the S&P 500 has bounced for about 3 days, and so has JPM. So this is an important stock to follow, even if you don't trade it. I told your listeners last week they could trade it at around the $50 level for several days to possibly a week's time, and that's still the case right now. But either way you slice it or dice it, this is probably one of the most important stocks that anybody could follow.
Well, about 7 days ago, we had a gap down on JP Morgan. Looks like we're pretty close to filling that gap today.
We're pretty close to it. That gap could ultimately get filled. I don't think that's a big deal. I think that tomorrow going into the weekend, we normally look for a flat to slightly positive trading day. So there's a more than fair chance that gap will get filled, even so much as so soon as tomorrow. I really don't think that's going to be that big a deal. I think after the July 4th holiday, that's really when things can really start to get shaky again for the markets. Generally, the powers that be, the central bankers, they're out stomping around each and every morning today and yesterday and the day before that saying, hey, we didn't mean what we said about QE. So they're trying to keep these markets afloat into the 4th of July holiday. That's what it looks like to us. Okay,
so I've got big cycle days in the middle of July, somewhere around the 13th, 15th area. Are you thinking that this is going to be a place to short into the market, or we've got a buying dip ahead of us?
No, I think depending on pattern, it could be a very good place to short into the market. I think that's a time where traders really need to be very, very careful going forward. I mean, we just got the first glimpse of what a market decline can look like. We haven't had one in so long. But, the reality of it is we were only down about 6% off the high, or a little bit more than 6%, just a touch over 6%. So, yeah, I think that's a time frame where the markets are very, very vulnerable to further declines. But it's really going to be more about the chart pattern, and we most likely would look after the July 4th holiday.
Okay, so kind of pull back, take a couple of days off for a vacation here, and then reassess after the holiday.
Yeah.
Okay.
I think right now that the markets are being supported. Look at the trading volume today. 110 million shares on the S&P Spiders. That's not very much. The volume has been declining over the past week, and sure enough, we've had a 4-day bounce or a 3-day bounce, so to speak. So, right after the holidays, I think that's when we're going to be looking to put some shorts on again more aggressively. Okay,
all right, that's good. All right, XLF, financial sector.
Yeah, I wanted to bring up the XLF because this is really this is all of the financials, so to speak, and you could see that this thing is held up pretty well. If you notice, XLF filled that gap from the beginning of May, the May 2nd gap from 2013. That was filled, I guess, about 4 trading days ago, and it's held up. Right now, the way I look at the XLF is that it does have a ton of resistance, chart resistance, around the $20.50, maybe $20.60 level, and then it's all the way up to $22 before the next big resistance level. So, there's potential upside for this market in the near term, but I don't think traders should look for this thing to be the next big breakout. I think traders should look at, hey, this is a trading market where I could get in for a couple days. I'll have to take my money off the table and get out for a couple days. I don't think anybody should, at this stage of the game, get married to these markets. They're not long-term markets right now. These markets are very, very vulnerable, and the XLF is something that's telling me that.
Okay, what about the interest rate markets?
Well, we talked about that on your program last week, and we said, I ultimately think that the 10-year bond yield is going to head up to around 2.9%. But we did talk about how it's overextended already, and the yields went up. I think when we were on your show last week, it was around 2.4%. I said they're going to 2.9. They ultimately peaked at around 2.6%, and they have pulled back a little bit. I still am in the camp that 2.9% is the level, but we're going to watch for pattern on that 10-year bond yield, and if we get a bullish pattern, which I think is developing right now,
it is.
We're going up there. We're going to go a lot higher.
Okay, let's look at the other way on price. Are you looking at, let's say, the 10-year? I've got the September contract up. You think we're going to rally all the way back up to that last resistance level we had at 122? 122 half, maybe 122.16. Further upside is what my question is, because it broke out over the resistance.
I don't think so.
No?
No, I actually, on the bond itself, I think that bonds could get a little bit of a bid here. But if they kind of trade sideways for a little bit, the bond market itself is going to head lower. And then when I really do most of my work on the yield chart, and I think yields are going to move higher. Okay,
I agree with you, but I'm just looking for some resistance area here. I'm on the 30 years right now. Give me an idea where you think we might see that.
Well, you're looking at a 30-year yield chart right now. What I would say is a pullback maybe into, say, 342.
Okay.
341, somewhere around there. That's where I would get interested in saying, hey, this is ready to make its move back up.
Okay. All right. Well put. Gold, what do you think?
Well, gold has been in free fall mode. I think it's still going lower. What I've been telling my members is let it fall. Let gold fall. Let it go lower. Wait for a capitulation day where, you get just massive volume in the GLD, something over 100 million shares, and that's where you take a shot. Right now I have a little short-term level for GLD around 113.75. But, when you get these kind of falling knives like this, they can go lower. So the safer play, the better play, in my opinion, is let it fall, wait for it to capitulate. After that, jump on board, use the most recent low as a stop loss. That's how I'm going to play it.
Okay. All right. 114, you said?
113.75.
113.75, because it looks like we're more gaining on possible capitulation now by the price action. I mean, we got some gaps happening.
It's getting there. We're going to need to see higher volume than this, though. We're going to need to see higher volume, and that's ultimately going to flush out all the weak hands, and then it's going to be time to step in.
Okay, all right. Now, I've watched you thread the needle from 1,000 yards out here on the show many, many, many times. Tell our audience what happened in your trading room today.
Well, in the trading room today, we took some profits on some longs from 3 days ago. So one of them was the S&P 500, which we went long about 4 days ago, and we locked in some gains today. We also had a few scalps out there. We even had a scalp right before I came on the microphone at 28.90 on CA, and it was only good for about 10, 11 cents. But nonetheless, it's just a quick little play on a day where you get a gap up like this, and you got one like yesterday. It's tough to get too many of the intraday scalps. But we have been taking some profits on some of the longs. We have one short trade out there that is not a little bit out of the money, but we'll see how it plays out. But there's opportunities galore out here, Michael, and that's the one thing I try to get across to all of your listeners. If you trade these markets, you have opportunities each and every day, regardless if the market goes up or down. Okay, now you've really done well on the copper market. Have you been watching that lately? Yeah, I'm always watching and following the copper stocks, and right now, really, it's more of a China play than anything. I know a lot of your listeners watch the JJC, and ultimately, I think the JJC has a little bit more downside to go. I would watch that one around 34.70. That's a level I actually like copper, and if you're looking at copper futures, ultimately, I do think that we probably have a little bit more downside. Let me just pop up my levels here and see what I got here. But I think we got a little bit more downside. Somewhere around the 275, 280 level looks pretty good for copper futures. Okay. All right. That's a pretty good trade from here. Yeah. That should be a good level, though, of support around make it 276, 277. That's a real good level for support. Okay. All right. We got about a minute left in the segment. Any last parting words about markets or anything before we go? Well, I think it's a very volatile market that we're dealing with. You're getting a lot of speak out of the Federal Reserve. One day, they're bearish. Next day they're cutting QE. Next day they're promoting more QE. So don't listen to that stuff. Just listen to the charts. Charts will tell us everything we need to do. We're hosting a webinar this Saturday. My partner Gareth will be teaching that, and you're going to learn all of his proprietary secrets. Traders, come on over, give it a shot. This is what it's all about. Don't be a slave to this environment. You can make money in any environment once you know how to trade it.
When you said Saturday, but I mean, is it start? When does it start?
Yeah, Saturday morning at 9 a.m.
Okay, and how do they access the webinar?
Yeah, they come right over to the chat room. I mean, you come right over to the website at In the Money Stocks. You could just send us an email or give us a call. The phone number is on there, or you could send an email to support it in the Money Stocks, or just sign up right through the website.
All right, Nick, thanks so much for coming on the show. Appreciate it.
Thank you, Michael. Have a great day.
You too. We'll see you next week. All right, Nick Santiago, President, CEO, InTheMoneyStocks.com. When we come back, we're going to be